The Canadian dollar is among the worst G10 currencies this year versus the US greenback. We're joined by Karl Schamotta, Chief Market Strategist at Corpay. Thanks very much indeed for joining us, Karl. So interesting that we have to some extent been dragged down by the US dollar.
Yes, the linkage between the Canadian and U.S. economies has really been sort of the downfall for the loonie this year. The fact that, the Canadian export situation is so tied to what might happen in the U.S., to the trade situation, to, underlying demand in the U.S., that has meant that currency traders have sold the Canadian dollar down, even as, things like the British pound, the euro, and even the yen have appreciated moderately against the dollar this year.
What is it? Can you generalize, Karl? I know this is a very broad question, but when the Canadian dollar goes down, is it good for the Canadian economy?
It's a great question. I definitely expect these kinds of questions from you, Andy, over the years. But I would definitely say, yes, that, to some extent, the Canadian dollar spent a long period terribly overvalued relative to the fundamentals in Canada, right? And I think that really damaged the export sector. It made manufacturers much less competitive, and it rebalanced activity in the Canadian economy away from our traditional sort of competitiveness and export focus toward internal consumption. And so, we have for a number of years now been correcting that. I do think that this is something that will help the Canadian economy to recover somewhat in the many years ahead.
I mean, we had massive overinvestment, I think some economists would say, in the residential sector, or at least disproportionate investment. But it hasn't done that much to help affordability. And now we hear that construction is slowing in important markets.
That's right. I do think that, the share of the Canadian economy that was going into residential construction was exorbitant. And given that it was also funded through debt, it was, a terrible vulnerability for the Canadian household sector and for the wider economy. And so it is good to be seeing some of that correct. Unfortunately, in the near term, that does have negative consequences, as you alluded to there. The fact that, we are seeing activity slowing, that is going to take a toll on employment. That's going to take a toll on overall GDP growth. And that is part of the thesis that has been driving the Canadian dollar down relative to other major currencies this year.
Tiff Macklem, the Bank of Canada governor, yesterday faulting the nation for not diversifying its trade away from the U.S. But I suppose America is the natural trading partner. It's just across the border.
That's right. Economists use things called gravity models to model how trade is likely to flow over time. And it's very, very clear that geographic distance plays the biggest role in determining who your trading partners are. I do think, though, that Macklem was really making a broader point about the structural orientation of the Canadian economy. He was suggesting that we should build up our domestic markets a little bit by reducing interprovincial trade barriers. I know everyone's talking about that. He was very clear in saying, we have to stop talking about it. We have to actually do it. We need to, build better transportation links so that we can move goods to the coast and then out to global markets where they earn, a higher premium. And we need to reduce overall regulation levels so that we make Canada a more attractive destination for foreign investment. And I think, those are very, very good ideas. They're ideas that have, been out there for a long time. But I think that he, along with his colleagues at the Bank of Canada, have really stepped up this year in terms of, delivering that message in a more, how shall I put it, more blunt manner. And hoping that, we avoid the problems that we've had in the past where we simply talked about it and didn't actually do anything.
I don't know. I'm skeptical. Vested interests, I think, will keep provincial barriers high. And expecting bureaucrats to get rid of red tape, that's not happening.
That's right. And I do worry, this is one of the real fatal flaws to how we're set up, is that we have a situation in which, businesses lobby for protections for their own particular segment and their own particular industry, while unfortunately dooming the country itself or as a whole to lower productivity. And then, the decentralized nature of the Canadian governance structure means that, that intersection drags us all down and increases that regulatory burden over time. And yeah, hopefully we have the political momentum to change this, but at the moment, currency traders and investors more broadly are not betting, the house on that idea happening.
And sorry, we're tight for time, but essentially, what a big factor, I presume, in the weakness of the loonie has been lower interest rates in Canada and the prospect of more cuts.
To some degree, I think now we're essentially range trading. The Canadian dollar is really not moving that dramatically, nor is the U.S. dollar, and that's because the two rate cuts that are expected from the Bank of Canada or have been expected from the Bank of Canada are largely priced in. The Fed's path is largely priced in, and now it's moving to other things. And now we're thinking about what might happen in U.S. equity markets, for example, in terms of driving overall currency movement. So I would say central banks are going to become less central to where currency markets move in the year ahead.
Karl, always great hearing from you. Karl Schamotta, Chief Market Strategist at Corpay. Thank you very much.